Well, looks like Wall Street hit the pause button yesterday. Hey everyone, it's Thursday morning, June 12th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, after a pretty strong run recently, U.S. stocks took a breather on Wednesday. The Dow was basically flat, the Standard & Poor's 500 slipped just under 0.3%, and the Nasdaq dipped around 0.5%. Not a dramatic sell-off, just a bit of digestion. The big story? A softer-than-expected inflation report and a somewhat vague new U.S. China trade framework. Before the market opened, investors got wind of a new agreement aimed at getting the Geneva trade truce back on track. Apparently, it addresses rare earths and magnets, and the U.S. said it'll let Chinese students stay enrolled in American universities, which had become a hot-button issue. But honestly, the whole thing felt light on details, especially when it comes to export curbs and tariff levels. So, not exactly fireworks. Now, the inflation report did perk things up a bit. Consumer prices in May rose just 0.1% month over month, below the expected 0.2%. And core inflation, which leaves out food and energy, was up 2.8% year over year. That's exactly where it was in April. Markets loved that. Why? Because it could nudge the Fed toward a rate cut later this year. In fact, the odds of a September cut jumped from 53.5% to 57.2% after the data dropped. Treasury yields moved lower too, with the 10-year yield falling to 4.41%. All in all, a day of mixed signals, modest moves, and a whole lot of waiting on the Fed. That's your quickie for today. Talk to you tomorrow.